take a look at some of the key levels on the major averages. Senior markets correspondent Kevin Green is with me now. This after we hit records this week for the S&P and NASDAQ. What are we watching now ahead of the Fed?
Well, Nicole, obviously the market is pricing in a pretty wide range here going into the Fed meeting, but we probably will see maybe some consolidation leading up to the announcement as well as the summary of economic projections. In that 30-minute window between the announcement and Jerome Powell speaking, we probably will see a fair amount of volatility because of that summary of economic projections coming out here. To the upside, I'm actually looking at 66.75. To the downside, 65.70. So once again, that wide range with 66.05 really holding as an area of support. We've been consolidating for the most part since Friday of last week. We'll probably continue to see that once again take into effect before we either break out higher or we break out lower here. Just given the commentary from Jerome Powell, given those summary of economic projections, I'm actually looking for the market to actually make a move here today, either to the upside or downside, and really have a defined range leading up to Friday's quarterly expiration when it comes to options as well as futures.
Oh, yeah, good point. I mean, that'll be some heavy volume there. When I just think about what's moving here, I see, and it's just, 0.25%, 0.5% materials, energy, industrials, healthcare, financials. Those are some of the areas, utilities doing well. Those are some of the areas with up arrows today. What about regional banks? You're watching that group.
Yeah, for regional banks, yesterday we actually did see a pretty decent down day. It was down about 1% if you're looking at the KRE. Now, there has been a lot of enthusiasm when it comes to the regionals with interest rates moving lower, potentially loan demand increasing. We saw that with the NBA data set earlier today. But now we're kind of testing the lower end of this support line or this channel that we've been in for the last couple of months here. This is a 3-year weekly chart. Once again, looking for a break to the upside or breakout to the downside here when it comes to the regionals. Nicole, for the bulls today, just want to highlight there's several different outs for the bulls. It's not only just potentially 25 today or 75 basis points total for the remainder of this year. It's also the fact that we could see the Fed funds projection for 2026 come in lower than the street's expectations. And then we always forget about the balance sheet runoff. We are still in quantitative tightening. That could also be ending in this meeting. And Nicole, that would probably be your big signal that the Fed is really willing to shift its stance when it comes to monetary policy as a whole. Also being ready for any type of purchases if we do see additional weaknesses. And the reason why I bring up the regionals, mortgage-backed securities, they're still running off around $35 billion a month when it comes to that total there. That's going to be a big deal. If they stop that runoff, that also could push mortgage rates to the downside, increasing demand, which should be a tailwind for the regional banks.
All right, Kevin. I mean, thank you so much as we look here and await on the Fed for possibly the first rate cut of 2025. Market certainly pricing it in at this point.